India's stock market was on a roll last week, hitting fresh highs, but overnight everything changed. Iran has declared the Strait of Hormuz closed, and oil prices have surged over 5%. In this video, we'll explain exactly what these developments mean for Indian indices tomorrow. We'll map out critical support levels, break down bullish and bearish scenarios, and show you how global events connect to Nifty and Bank Nifty, so you will know what to watch when markets open on Monday. Let's dive in. This is for educational purposes only. Good evening, welcome back to the channel. Big news out of the weekend. Iran says the Strait of Hormuz is closed until further notice, and US warships have launched new strikes. Meanwhile, oil has shot up over 5%, putting instant pressure on energy markets. Last Friday, our markets were breezing higher. Nifty was about 24,200, but now the mood has changed. In today's video, I'll unpack why global events can move our markets, what the charts are telling us, and how bullish versus bearish scenarios might play out. We'll also dive into the options chain and sector trends so you know exactly what to watch this Monday. Remember, this is for education purposes only, not trading advice. First, let's recap the weekend's events. Reports say US forces conducted heavy strikes on Iranian targets, and in turn, Iran's Revolutionary Guard struck back at US allies in the Gulf. Critically, Iran announced the Strait of Hormuz is now closed until the end of US interference. This narrow channel is a major oil choke point. About 20% of the world oil and gas flows through it. Even though the US claims commercial vessels are still transiting, markets are reacting as if a blockade is possible. As you'd expect, oil prices jumped. Brent crude was trading over 76 per barrel last night, its highest in weeks. Analysts warn that any prolonged disruption could send oil much higher, fueling global inflation. To put it in context, India imports about 80% of its oil needs, so higher Brent and WTI mean India's fuel import bill will balloon. That can feed into petrol, diesel prices domestically. Indian companies like IOC, BPCL, and Reliance might see more expensive raw material costs unless subsidies adjust. Other commodities like gold briefly dipped on Friday. But typically, oil spikes are bullish for gold as an inflation hedge. We'll watch if gold recovers next. Industrial metals might wobble if growth worries rise. Now recall where markets left off on Friday. US indices actually rallied on July 10th. S&P 500 was up 0.4%, Nasdaq 0.3%, led by tech gains. The Dow was about 0.3%. Wall Street shrugged off earlier Middle East jitters, and Treasury yields ticked up 10-year 4.56%. The key was easing Fed worries. Investors priced a later hike, September or later, and were optimistic. Asian indices ended mixed, with Tokyo falling but Hong Kong rising on Friday. However, since then, Trump, as US president, reportedly declared the Iran ceasefire over, although US says it's still open to diplomacy. Real-time sentiment flipped from calm to caution. In a recent video, we saw how even rumors of conflict can move futures. Now it's the real deal. Tomorrow's open will reflect those overnight shifts. In India, one major channel is the rupee. Oil is up $5 means INR usually weakens. Last time around, when oil spiked Feb, the rupee sold off by 1 to 2%. If Brent crosses $80, we could see pressure above $80. Finally, global liquidity matters. We had easy liquidity here, but if FIIs pull out on risk of rupee and stocks fall, FII flows in 2026 have been volatile. A few months of selling in Q2. We'll monitor Monday's FII net flow announcement. Now on to charts. On the daily chart, Nifty has been in a tight range for about a month between roughly 23,750 and 24,350. Friday's close 24,207 was near the top of that box. For Monday, imagine Nifty gaps down 100 to 150 points, say around 24,050 or lower. The first question, does it find support around 24,000 to 24,100? If Nifty holds there, buyers may jump in and defend the range bottom. From there, a bounce to retest 24,300 to 24,400 is possible. But if it falls through 23,750, that would break the range low. Then we could see it slip to 23,500 or beyond. A daily close below 23,750 would be a clear bearish signal. For guidance, 24,350 to 24,400 is resistance, recent swing top. 23,750 is support, recent swing low. A break below targets 23,500. A break above 24,400 opens 24,800. Keep these in mind. Bank Nifty is a similar story. It closed 58,045 on Friday. So 57,400 to 57,500 as crucial support. If Monday gap down, watch if Bank Nifty stays above 57,400. If yes, bulls in control, we could see a quick recovery. If not, the next band is 56,400 to 56,500. Breaking that could lead to 55,500 or lower. Sensex key support is around 77,100 to 77,200, Friday's intraday low. Above that, dips get bought. Below that, next support is around 76,300. We must stress that this analysis depends on current volatility. If markets are calm by midday, unlikely if conflict persists, then technicals matter more. If panic reigns, fundamentals will override charts. Let's talk options data briefly. As of Friday, the put-call ratio on volumes was roughly neutral, 0.9 to 1. More puts open at strike 24,000 to 24,200, which is also Nifty's max pain at 24,200. That suggests expiry could gravitate there in quiet times. But in a volatile scenario, PCR will likely spike as traders rush to buy puts and sell calls. This would indicate fear. If Nifty gaps down, PCR could jump above 1.1 intraday. Max pain 24,200 means if Nifty stays near this, option writers keep most premium. But on Monday, if Nifty heads far from 24,200, be aware that OA might roll or drop as writers hedge or unwind. Open interest built up heavily at 24,000 calls and puts for July expiry. If Nifty falls, use put OA at 23,500 to 23,750 may provide a safety net. If Nifty rises, big call OA at 25,000, just a round number example, could cap upside. Sector-wise, this event is likely to rotate money out of cyclicals into some defensives, at least short term. Energy stocks like ONGC, BPCL might climb on higher oil. Through note, downstream margins may get squeezed. Meanwhile, interest in defensive sectors often rises. Pharma and staples may outperform if broad indexes fall. Banks will be under pressure on two fronts, weaker economy and higher bond yields hurting margins. Auto and consumer durables tend to suffer on fuel price worries. We saw Friday that realty and media were already lagging, maybe due to normal profit booking. Those two might continue trailing. On the positive side, if government increases defense spending in response to threat, defense-related companies L&T Defense, Bharat Dynamics could get a bump. Mid-cap and small-cap stocks often suffer more in risk-off. We should watch the mid-cap index levels. It was 1.4% up on Friday. If indices slide, expect stronger correction in mid-caps. Currently, FIIs have been modest buyers, but heavy selling on Monday is possible. If we see large FII net selling in market data, that confirms the down move. DAs usually buy on dips, but they have limits. Liquidity is ample, so funding risk is low. However, keep an eye on RBI's announcement. If CPI suddenly spikes, RBI may signal action. So, what to watch Monday? Pre-market data, futures or currency, India Wix and sentiment service. A rising Wix means fear. Any overnight news on Iran or US or NATO. Oil price and BPCL stock as a proxy. I'll be back with more as things develop. Jai Hind and trade carefully.